Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Corn futures recently produced lower lows on the market right on top of our 2x1 angles in a very timely fashion. But in doing so, the momentum from which those lows were made, the first low was on significant strength and the next subsequent low was on much lower strength. When that happened, that is an indication of what we see or what we term as divergence. When divergence occurs at key potential support levels, it is not uncommon to see a bounce in the market. And that's exactly what we found here as the market made its way up and the resistance that we found was right along our 1x1 red angle. The market now reacted on Friday in a very strong fashion and has reversed back down, and we would be looking for continued follow through on the way down for the market to touch somewhere in the neighborhood of 330 to 340. This upside resistance is just shy of the 270-degree mark of 369.5. As the market made its way just past our point of control level of 361.5, the market has since reversed in a very strong fashion, and now that it is turning back below our sinusoidal wave, if the market continues lower next week with some good follow-through, it would not be surprising to see the market come down and test somewhere in the neighborhood of that 330 to 340 mark. Upon doing so, the market would then be resting near volatility-based support. And so what we would now be looking for is continued follow-through next week to see how the market moves. We do have a potential time factor coming in on October 6th. And so if the market continues to decline into that October 6th number, perhaps we can find near-term support near 350, where the market could give us a small bounce, but we would anticipate a lower high would occur from here, perhaps just shy of that sinusoidal wave, and for the market to continue lower. The alternative would be that the market would actually find continued energy through this time factor, where the market would then rapidly make its way down to about the 330 to 340 price level. And so from there, once again, it's going to be important to see the way in which the market responds in the near term. Soybean futures also showed some strength off of our key 360-degree mark of 816. And from there, the market went up, and we were looking for resistance to occur just above the 270-degree mark. The market was able to trade just slightly above that level over the course of the week, but as we can see on Friday, the market once again has returned to weakness and is now trading back below that key 270-degree mark of 844 3/4. As with corn, in the coming week, we'd like to see where follow-through occurs, but the narrative for soybean continues to be that of a very bearish condition, so we would anticipate continued weakness on the way down, where this market could very well go down to test somewhere in the neighborhood of $8. Key support for the soybean low was very timely when it reversed right on top of our 1x1 angle. And to no surprise, the market made its way up to our 2x1 angle where it found very good resistance. From here, once again, the market is looking to find a bit of weakness, and so follow through in the coming weeks is going to be key. Wheat futures gave us a very clean bounce off of our 1x1 angle and has gone up for about 7 to 10 trading days, where it found resistance against our 2x1 angle and has made its way back down. We do have a time factor that has hit on Friday, September 28th, and the market has come in and is looking to find continued weakness. Next week, we'd be looking for about 505 to 506 to be potential support. If the market's not able to stay above this number, then a retest of previous lows is in all likelihood imminent, where the market would go back to retest that 490 number and perhaps go down to somewhere in the neighborhood of 470 before finding a potential low. Upon reaching downside support, there is the potential for a bounce, but the key level that we're looking for once again is near that 505, 506 number. Below the 505, 506, we do have a point of control that sits at 488.5. And upon breaking there, once again, we do think that somewhere in the neighborhood of 460 to 470 is possible. Key resistance for wheat was at our 180-degree mark at 535 1/4. And upon reversing here, again, we can see the market is now coming back down to retest what was previously volatility-based support. Breaking through this previous low tells us that the market can make its way back down. And if it finds weakness below that 470 mark, we would not be surprised to see him test somewhere in the neighborhood of 450. Recently, the Fed has raised rates, and in doing so, the US dollar actually recovered a bit and was able to find support about 94 as opposed to breaking down to the 92 or 93 area that we had been looking for. The response to the increase in rates has given the market a very nice push, and now we're testing somewhere in the neighborhood of $95 for the US dollar. Continued strength for the US dollar could be on the horizon given the recent adjustments by the Fed. The first key line of resistance then we'd be looking for would be near the previous highs near 96.65. On the longer term weekly chart, we can now see a very strong reversal bar from this week after the market had been down for about 5 to 6 weeks. And once again, we're looking for potential resistance overhead near that 96.60 mark. And if the market's able to clear that area, then we could potentially see a very nice advance up to about 100 for the US dollar. In doing so, we'd be looking at potentially a mirror move opportunity that would mirror the length of the advance into this consolidation on the other side on the way back up. And just as the market made its way up very quickly, it would not be surprising to see a very quick advance in the US dollar given the strong reversal that we saw from this week. Crude oil futures made that push that we had been long looking for it to touch a minimum price objective of 72. In fact, the market made its way up to just shy of 74 today and could very well make its way up to about 75 near our top end potential goal projections. We are looking at a time factor in early October where the market could potentially find a bit of a pause on its way up. But the key area that we're looking for as far as crude oil is concerned is for the market to continue up to sideways through the middle of October. Upon reaching that time horizon, we can then find potential resistance overhead, and the next key area of resistance that we would be looking for is at the 360-degree mark near 76.50. Thank you so much for joining us for our regular market update. Look forward to touching base with you again next time.